And hello, this is Michael Lodge. I'm glad that you are with me. I'm not having coffee. I'm having a cup of mint tea because I just feel like mint tea. When I was in South Carolina, I learned how to make mint tea. And my mom, she had grown tons of mint. So easy to make good, fresh mint tea. And I tell you, it was strong mint tea, but it was good mint tea. And it's so good for you, too. As an antioxidant and everything else. And also when you feel sick and you feel like you're coming down with a cold, great stuff. But I just like mint tea. I've always loved mint tea. One of my bad things. Listen, a lot of you are going to be going through a divorce, or you're going to be going through a separation. And what I am finding a lot is that in the process of me mediating divorce and separation, a lot of separations going on, is the tax aspect of divorce and separation. One of the most important aspects, and it's often forgotten about, is the tax consequences. There are tax consequences of the decision of separating and divorce. As you go through separation and then divorce, I always tell those who are going through this process, consult your tax practitioner so that you know how it's going to affect you. Go to one that really understands the tax rules on separation and divorce. Go to an individual who handles this on a consistent basis. If you go to H&R Block and one of these other places, you're probably not going to get the same type of expertise as you would by an individual who deals with it every single day. So you need to go to someone that really understands the tax code, the state rules, and everything else that has to do with separation and divorce. And also the IRS has guidelines to follow, and it's all in written form, and everything's ready for you to follow. So you need to understand the separation agreement and the divorce decree and all the way through to that final situation where it actually says you are divorced. But there are tax consequences and tax decisions that you as an individual have to make and that you have to make as divorced individuals, divorced people. Taxpayers, you guys out there, should be aware of tax law changes related to alimony and separation payments. So they have changed. These payments are made after the divorce and separation. The tax courts and the Tax Cuts and Jobs Act changed the rules around the issue of divorce and taxation, separation and taxation. And it's going to affect you. It's going to affect certain taxpayers more than others. So I want you to think about this very carefully, okay? And listen very carefully. So we're going to go over some of the basic rules that we know at the moment. Here are some facts that will help people such as yourselves that are thinking about going through this divorce or separation. I want you to understand the changes and who they will really impact. So the law relates to payments under the divorce or separation agreement. Remember, you are putting together an agreement. You come to the mediator, you go through all of your assets and liabilities and what's going to be given to what person, who's going to be responsible for what bills. That's all discussed, right? So that is the divorce and separation agreement, and that is then given to your attorney, and he's able to put it into a legal form. So you have to be in consideration of the divorce decrees, the separation maintenance decrees, written separation agreements that you have between each other. You have to worry about that. So in general, the taxpayer who makes payments to a spouse or a former spouse can deduct it on their tax return. The taxpayer who receives the payments is required to include it in their income. However, beginning January 1, 2019, alimony or separate maintenance payments are not deductible from the income of the payer spouse, or or it's not even includable in the income of the receiving spouse. It made under a divorce separation agreement executed after December 31st, 2018. If an agreement was executed on or before December 31, 2018, then the modified after that date. And so think about this. So you were in divorce December 31st, 2018, and then modified the separation or divorce agreement after that date. The new law also applies. So if you adjust it, it's going to apply. So let's say you had a divorce decree before the date that the new law came into effect. You were still able to deduct the alimony, and you were still able to claim the alimony as income. If you made any kind of adjustments after that date, it then is susceptible to the new tax law. So those of you who are modifying your separation agreements afterwards or divorce agreements afterwards, have to think about this very carefully, okay? Because it's going to affect you under the new tax rules adopted by the Congress and under the IRS. So if an agreement was executed on or before December 31st, 2018, and then modified after that date, the new law all applies, okay? It applies. The new law applies if a modification does these two things. It changes the terms of the alimony and separate maintenance payments. And secondly, it specifically says that alimony or separate maintenance payments are not deductible by the taxpayer's spouse or includable, I should say, in the income of the receiving spouse. The other issue is agreements executed on or before December 31st, 2018 follow the previous tax rules, okay? If an agreement was modified after that date, the agreement still follows the previous law as long as the modification don't do what is described above, which is it changes the terms of the alimony and separate maintenance payments. The new law applies. It specifically says that alimony or separate maintenance payments are not deductible by the payer's spouse or includable in the income of the receiving spouse. It's under the new law. Remember that, okay? If you want more information, you can go to the Internal Revenue Service publication 504, which is called Divorce and Separated Individuals, and then publication 5307, Tax Return Basics for Individuals in Families. Now, I just kind of briefly went over some of the issues. There are other issues that you need to take into consideration. But you need to go to your tax practitioner before you go to your attorney, divorce attorney, or your mediator, and discuss the tax implications if you want to change, or for you guys going through divorce, if you're going into a divorce or separation agreement, what the tax rules are and how they apply to your situation. Everybody's different, right? Everybody has a different set of divorce situations and agreements. So I've said this so many different times before when mediating a separation or a divorce, is that I always tell them, before our next session, I want you to talk to your tax practitioner. Now, I'm a tax practitioner, and I can give them that advice, but it should not come from me because I have to remain as a third party. But they need to. We're going to have that tax discussion. We're going to have it, especially if there's children. Who's going to be able to claim them on? What is the separation agreement going to say? What is the divorce decree going to say? Who's going to be able to claim them? Who's going to be the primary parent of this child and who's going to be spending most of the time at their house? You have to take all that into consideration. So I'm asking you as a mediator, go talk to your tax practitioner. Learn what the tax rules are and how it's going to apply to you under this divorce or separation agreement that you may be going to enter into. Make sure it's specifically clear that all parties understand what the tax issues are. And as a mediator, I want to hear from both sides, because I've got to guide you into an agreement of how you're going to handle it. Okay? I tell you, divorce and taxes, they never end. Taxes keep going on, divorces keep going on. But you can modify your behavior on how to handle this by sitting down with a tax practitioner or professional and going over the situation. If you have any questions, send me a text at 818-252-5682. Again, a text to 818-252-5682. Go to my website at www.lodge-co.com. By the way, if you go to my website, I have a biz blog there, a business blog. I have an article of what we just talked about and the links to the Internal Revenue Service site so that you can read up on some of that information. The title of the blog, if I can get the right mouse here, the title of the blog is called Divorce, Separation, and Your Taxes. Divorce, Separation, and Your Taxes. Read it, apply it, do it, talk to your tax practitioner. This is Mike Lodge. Everybody have a great day. God bless. This podcast is produced by Michael Lodge, fully focused on content. Go out and have a great day. God bless.